Hope everyone's doing well, and welcome back to another weekly outlook. So cool. Of course, you guys got the trade breakdown on, I believe I put it out on Friday night. Friday night, I'm assuming a lot of people are away. Just it's the weekend, relaxing, getting away from the charts and, just away from work in general. So I'm sure that a lot of people may not have watched that. So I would urge that if you're watching this, is a good video, right? Even if you don't want to watch the whole breakdown, I'll say the first 10 minutes or so are very, very key, right? And I would, just suggest that you should watch that, right? And there's just some good bits of key advice, right? I know it might be a lot of the same stuff I reiterate, but it's good to get perspective and always get it with examples, right? So cool. We'll get into this weekly outlook. I would say last week is not a bad week by any means. Results wise, not the greatest, however, also not the worst by any means, right? It's actually the sort of weekly prints we like to see, right? Monday we expect it to be small, bank holiday, order block being created, tapping into the previous array, displacement away, and now you have a new range to play with. So now, as you guys can see, very obviously I've already got some markings on my chart. On the DXY, if you guys remember from a couple of weeks ago, we said our sort of interim or drawn liquidity, regardless of whether we're bearish or bullish, on this sort of higher time frame for now, is this monthly fair value gap, right? This is the target for us. This is what we want to see price broad towards. We consider the monthly candle. Previously, we were probably somewhere like here, and we knew, we're looking for that previous monthly low, and we're looking for expansion this way, right? Considering the time of the month, seeing we've had that open high and now, we're moving this way, I would anticipate the last week of the month continues to move down. When we come down to our weekly chart, I have no reason to assume that we would not move lower in the coming week, right? So for the next week, I'm anticipating continued expansion in this direction. And when we come on our daily time frame, it actually gets very clear to see that we're in what is a daily trend now. We had a massive buy-side liquidity sweep. Even here, we've had a buy-side liquidity sweep, taking some very old buy-side that we pushed through. And then, of course, more recently, we've had this big sweep. A move down, retracement, displacement down, retracement, displacement down. And we expect something very, very similar this week. So when we come to our economic calendar quickly, on the Monday, I would not expect a whole load. On the Tuesday, we have the consumer confidence. However, this is not always a main mover, but one trend you guys should, start to recognize is that even if the news drop itself does not necessarily do something crazy, or, it's not as volatile as you expect, usually the days with the red folders will still give you a good print, a good daily print to either go off or, during the daily print, something you can take advantage of. On the Wednesday, we don't have much, right? One thing I'd watch for the G20 meetings, it is an orange folder, but, with folders like this, I'm always cautious because, there's no direct timing. There's no direct say of what they might say, what they might not say. So just something to bear in mind, right? And on the Thursday, I would say we have the biggest mover of the week, which is our GDP. And towards here is where I would anticipate, we get a nice kick, where we actually get a very strong definitive move. And we also have PC price index on the Friday, which time to time is a big mover. So it will be something to pay attention to. Right, cool. So what are the charts telling us? Now, very clearly, we've established that we are bearish. We want to see price go lower. So what are targets for retracement? The easiest target to go off of, right, is actually a mixture of a couple of arrays. We have this daily fair value gap, which will also result in a sweep of the previous daily high. And we also have this daily order block. Now, I like order blocks like this. I like to see my order blocks manipulating, creating the high, and then price moves away, right? In the PD array matrix, it's order block followed by expansion. So now I believe we are again in the order block creation phase. We've created an up candle. Possibly the next candle is an up candle, or the candle could give us a sweep and even move early in the week. It's hard to say. It's something you'll have to assess when you're there at the moment. But ideally, what we want to see from price is price reach towards this previous daily high, into this daily fair value gap, and hit this daily order block to then trade lower. When it starts trading lower from here, which is of course the sort of premium off the range, where some people might even consider swinging. If you're somebody that will consider swinging this, I would wait for that daily close, unless you're very confident, unless you get something like a 1 hour market structure shift and it ticks your boxes, right? Anyways, that's another topic, but essentially this is a very good area for a reversal. So this is where we are waiting for. We want to see price trade into this, displace away. Once it displaces away, your first obvious target is your previous weekly low, which rests below here. And of course, past that, we also established we have the monthly fair value gap as the overall sort of drawn liquidity. If we just quickly come on a lower time frame, you guys can see I've got another marking for the trend line. But the reason I'll mark the trend line in specific is this is just a form of accumulation. This is very clearly, although intraday, this is not small moves by any means. This is an accumulation at the end of the range, meaning, if this is A and we have a sharp move here, that's your M, and then distribution back down, which is, of course, your D, the AMD. And of course, the reason I've marked this out for you guys can see just a lot of engineered trendline liquidity here, obviously. So this is sales side liquidity waiting to be taken. So something to just bear in mind, just adds to our sort of base case scenario there. Let's see how our bond yields are looking. Very, very nice. This is exactly what we spoke about seeing. We said, price ran this buy side. It pushed a bit harder than we thought. I'll be honest, the bias got a bit shaky once we printed these big candles this way, and we were thinking, what, we've swept the previous monthly low and we've sort of displaced this way. What if price is, going to push higher? And it became a maybe. It became dependent on our weekly close and, how the monthly candles start shaping up. But past that, what price has actually done, of course, is left this as a swing high very nicely, started expanding lower. Considering that, I would anticipate further expansion lower, especially based on this type of weekly close. Very big wick sweeping the previous 2 candles, moving away. This week we expected the bearish move towards the current low of the range, which was not taken out, meaning that this week I just want to see that move continued. Of course, we don't trade the bond yields, but you guys can see we have daily fair value gap printed, probably the type of area that price might trade back into before continuing this way. We've got very nice equal lows. And of course, this, we can count this as relatively equal as well. It's very close to it. I'd anticipate that the bond yields trade lower, and I want to see this nice weekly wick that was created be the current sort of swing high on our daily chart. And from here, price continues building this leg down this way, which is great to put next to our DXY, right? Euro GBP. Very annoying pair for me this week. It's a massive love-hate relationship with Euro GBP, if I'm being honest. If you're on the right side of it, you're very happy. Price goes against you, your pair doesn't retrace. Price goes in your way, it flies your take profit. If you're on the wrong side of it, it's the exact opposite. Price retraces against you, it wants to fly. It wants to go towards your take profit. It's going to be the slowest pair ever. So, very annoying. We took previous monthly low. We knew after taking previous monthly low, it's likely that a retracement is due. We've left some daily fair value gaps behind. And, we wanted to see, will price outfed this a trade low, or what's going to happen? What's actually happened since is we've just built a consolidation. From this consolidation, it's hard to say exactly when we will break out. I believe we do have a mover. We have the CPI this week on the euro. Apart from that, nothing major stands out. Possibly the German federal elections, which is actually today, might cause some sort of, echo effect on the EURUSD. But essentially, from here, I would anticipate AMD. Right, we had a similar play here where prices, had that AMD, had a sharp move up and then a continuation down. That's what we're expecting here. If this is accumulating, just wait for that sharp move up. It will end up sweeping the previous couple daily candles, hit this fair value gap, possibly reach into this one as well. And then from there, you would expect that move back down and price to continue this way towards our next sell side targets. So now, somebody actually asked me to quickly cover EURUSD and GBPUSD 2 weeks ago, which I didn't. So we'll quickly do it, today. So, of course, we're bearish on the DXY, so we want to see which one of the pairs is looking like the better long for the time being, right? And there's a few ways to do this, right? A few ways to judge this. And one way, of course, you guys will know is SMT. Now, SMT is not always a viable way to tell them apart. because it may not be present. SMT is only viable if you're next to some sort of specific array or major liquidity sweep, you know, something, let's just keep it simple, like a previous daily low, previous weekly low, etc. So just from the looks of it, of course, when we look at EURUSD, of course, bear in mind that we're bearish on the Euro GBP and it has been moving bearish. You can see there's failure to sort of take these highs, whereas DXY has very nicely smashed through its lows, right? And of course, we haven't taken this high, whereas I would argue, you know, if we quickly even pair it up, I hate when it does this, but for some reason it uses on my old settings. Okay, this one, and we'll switch this to a daily. Cool, zoom out. So if you guys see, right, when I move my cursor, right, it moves on both screens, right? So when I line it up with this high, which is 27th Jan high, which was a 27th Jan low on DXY, DXY has smashed through that low, but EURUSD has not even got close to it, really and truly. So now if we quickly change this to GBPUSD, let's see how it's fared, right? If we go to 27 Jan, GU has absolutely obliterated that high, pushed well past it. And if we even look more locally, right, if we look at the most recent high, or rather low, that was made on DXY that we wanted to see get hit out, GU has smashed through that, right? It's over here. GU has smashed through that high, which was here, traded through it. We go back on EURUSD. So I'm gonna get confusing like this, sorry guys. Go back on EURUSD, and we look at the most sort of recent high, which is this low on DXY. EURUSD has failed to take that, right? So clearly EURUSD is showing signs of bearishness. Now, the reason that I don't particularly cover them in every weekly outlook is because we trade intraday, right? That means the bias can shift day to day, depending on what Euro GBP is doing. You know, if just because you're bearish on Euro GBP for the week, right, it might be bullish on the Tuesday, and you might be trading on the Tuesday. So then, of course, your bias for that particular day, that delivery might be better on EURUSD versus GBPUSD, or whichever way it is, right? So the reason being that it can be so discretionary when you're on the lower time frames is a reason that I don't really cover it the weekly outlook, because I don't want to suggest that, oh, guys, you know, this is the pair, and then if you happen to be trading at a different time to me, just, you get me, it's not going to be relevant to you, right? So you have to look at it session to session, look at it for the 4 hour candle. Just because it's bearish on the day, right, let's assume you're trading London, but London trades bullish for Euro GBP, it might completely throw you off. You might pick the wrong pair, right? Just something to bear in mind. So that's, you know, essentially the reason I don't cover them often. But from the looks of it, it looks like GU for us generally is looking like a much cleaner, better long, and we have some nice buy side targets. I would definitely be paying attention to this buy side, right? I think this is the sort of buy program for GBPUSD right now. I would also pay attention to this high and see, you know, price will, if DXY continues bearish, if it heads for that monthly fair value gap, price will pick these off on GBPUSD, right? It's just a matter of time, but it's just good to bear in mind, right? If this is the pair I'm trading, or rather even on both pairs, right, consider your buy side targets. And I'll fix that in a second, but essentially have them marked on your chart. So even if you happen to be switching between EURUSD, GBPUSD on different days, at least you have targets to work towards. For example, if I come on Monday and I'm longing, I have a obvious buy side target on the EURUSD, right? We can add another one very quickly. It's over here, right? That's your next buy side target. Past that, we can consider this high. You know, potentially price will reach this. I think price can reach this. I think it's definitely on the cards, especially, you know, if Euro GBP decides now is a good time for it to give us a bit of a retracement. The next week or maybe 2 weeks, you could see price, you know, push a bit harder EURUSD and catch up that lagging move. Cool. BTC, not much to talk about, if I'm being honest. Just a monthly candle, quickly consider. Nothing amazing. It's not taking the previous monthly low. It's an inside candle, which of course shows us accumulation. Not something we need to, you know, be surprised by. It clearly is an accumulation, right? If you go to the start of Feb, which is here, 1st of Feb to now, you're just stuck in this big range, right? Specifically, the candle closes are between here and about here, right? Not great. Essentially, just as before, there's nothing changed. You want to see clear manipulation, you want to see clear displacement, and then we can consider, it's going to go here, it's going to go there. But when it's stuck in a tight range like this, we don't have a bias, we have no reason to be, flip-flopping in price and trying to force something out of this. Right? If the bias is not there, it's not there. Lastly, S&P finally, very nice, did take the high, which is what we wanted. Again, we'll consider the monthly candle. Coming off a candle like the previous monthly, like I've probably said all of this month, we'd expect the next month to expand higher, but we have taken the previous monthly high, right? Something to consider. And sometimes that means, a trade back into the range. And now what this is looking like is a very choppy chart in the weekly. And when price gets like this, it's, difficult to read. What I would say is focus on your local liquidity sweeps. It's very likely, right? Just consider proximity. You don't have to make it complicated. Price is very close. Let's assume price opens at here. It's very close to this sell side target, which is a weekly low from 2 candles ago. It's likely, if you are bullish, it's probably going to sweep this first, right? And even if it happens that price, sort of goes up first, then you can probably short it down to this low, right? Even though you might be overall bullish on the S&P, which is what I am, doesn't mean you can't partake in shorts if you're offered a high probability setup shorting from somewhere up here to go down to these lows. But that is indeed what I'm looking for. This is some big displacement down, which can be a bit intimidating and is not nice. But I want to see price trade lower, sweep the sell side, right? With these liquidity pools where, you have multiple wicks, you have to understand that there's liquidity engineered underneath this. What, retail or retail, yes, will view it as this is sell side liquidity. This is a area that price are respecting more than once. 1 candle, 1, 2, 3, 4, 5, 6. Count this as well, 7 candles respecting this. If a candle comes and wicks this, sweeping that sell side, displacing this way, then it's likely we will reverse again. Meaning you would have swept in, taken the sell side liquidity, tagged in a lot of people, right? Tagged in a lot of orders rather, and reverted on them. Right, take them out the game, counter pair, and target this side again. That's the sort of scenario I'll be looking at. But yeah, guys, that is it for the weekly outlook. I think it's a pretty good video. I think it's always going to be a good video when we have a clear bias, where we have clear things to work off. It's always harder to give teaching points and pinpoint things when the bias is not as clear. But hopefully all of that made sense. And as usual, anything I can help with, just drop me a message below or on Telegram.